Hey guys, it's Chris Mincola with the Mincola Group over at West USA Realty. And I am going to be going through this is going to be my second video on is the housing market crashing? I did one about a week ago and wanted to kind of give you some more information on that, some updated info. And last week I kind of showed the proof of the facts of where we were in regards to, last year to this year and the last couple of years to this year, kind of where we're heading into the next couple of months and what the media has said in the past and how they've been wrong. So make sure you check that out. You can always reach out to us for that info, or you can always go to our YouTube page at Mincola Group on YouTube or Facebook. And Instagram if we've uploaded it there yet. So anyway, without further ado, I just wanted to kind of go into this a little bit more in detail, and I'm going to share my screen here with you real quick and just kind of run through some things here. Let me just go ahead and share this with you. Okay. So the first thing I wanted to share was Arizona had the second largest home price appreciation right here among the states between the first quarter of 2021 and 2022. With only Florida having higher at, let's see, we were at 27.5% in the first quarter, and then with Florida having a higher figure, 29.8. You may say, okay, yeah, Chris, that's nice, but we know the market has shifted. Okay, so let's look at this. This is also, again, this is from Big AZ Media that's kind of hyper local for us in the metropolitan area. I'm going to start there and look at this. So we're also right now, as far as closer to looking at the up until the end of June. Okay. This is from Dow Jones. Today released latest results for S&P, CoreLogic, Case-Shiller in right here at the top is where I'm reading from. Let me highlight that for you. Case-Shiller indices that the leading measure of U.S. home prices data released today for June 2022 show that home prices continue to increase over the United States, throughout the United States, and Phoenix ranks number 4 in the U.S. for year-over-year home price increases with a 26.6% spike in home prices. So we were ranked, if you're going, by quarter, year-over-year, the beginning of the year, 2021 to 2022. Now we're ranked number 2, but we're at 26.6. Again, average for the Phoenix metropolitan area, historic average is going to be about, let's say 4.5 to 5 would be very conservative, probably, near 6 now with the last couple of years, but those would be historic averages. So we're still surging in house appreciation. So that's one big thing. Okay. And then I wanted to also read from you an article. I'm taking this from, let's see if you can see that here. This is from, let me get rid of this. This is from Redfin, and they basically housing market update, newly listed homes fall most since 2020 as sellers pull back. Okay, sounds horrific, right? But let's look at some of the leading indicators here. We look that they mention. Okay, home buying activity for the week ending August 11th, 30-year mortgage rates rose to 5.2, which obviously is going to affect the market somewhat. With a high of 5.8. The latest home purchase sentiment index, Fannie Mae, indicates that the share of people who believe now is a good time to sell is rapidly declining. Okay, and usually when rates go up, a lot of times people want to bail on the market, especially investors, maybe people who have second homes, things like that. So fewer people search for homes on Google during this time period ending in August 6th. Keep in mind, and I've mentioned this before, that's not uncommon, okay, which they don't really mention here because the seasonal stuff happens. Like for us in the Phoenix area, our peak season is going to be April, May, in the spring, maybe early summer, but usually spring, April, May, March, April, May, because our school lets out in May. Back east and in certain other areas, it's going to be more, you guys are back in school around September. So, people usually try to move during that time period for the most part and the largest numbers. You'll usually get a little bit of a surge at the end of the year, right before the holidays, like right after Labor Day and into October. We usually see a surge every year, but let's dig into this. Seasonally adjusted Redfin Homebuyer Demand Index, a measure of requests, home tours, and other home buying from Redfin agents, was down 9% year over year during the week ending August 7th, but it's up 17% from the week of June 19th. So again, digging into these numbers, we're going to see more than what we're getting in the mainstream media and a lot of the clickbait that's out there online. Okay. So touring activity as of August was down 7% from the start of the year, compared to 15% increase at the same time last year, according to home tour technology company Showtime. That's a system that a lot of people use in the industry. Showtime is kind of giving these numbers of what is being shown. Now, that isn't everything being shown, because sometimes properties are shown outside of that Showtime number, just to kind of give you a heads up on that too. But it is a system that many MLSs use in regional to set up showings. We use that here right now. I think we're getting ready to go to another company here soon, but mortgage purchases applications were down 19% from year earlier. And obviously that has to do with going from 3% to over 5% interest rate. So it stands to reason. So the next thing I wanted to show you, so we dug into that a little bit. Let's look at let's see, data based on homes listed and or sold during the period. Okay, so median home sales price was 379 and some change, up 8% over a year. Price had declined. Again, this is nationally, right? This is nationally. Prices have declined 4.1% from the record of high of 395 hit during the 4-week period ending June 19th a year ago. They rose 0.7% during the same period. Okay, so if we dig into that a little bit more, only 2 metro areas. All right, let's look at this. Only 2 metro areas saw year-over-year decline, and that was Oakland, California, where prices fell 1.5%, to 940 in San Francisco, where prices were down 2.4%. So only 2 metro areas saw a decline. Okay, so that doesn't sound like a crash. Does that sound like a crash if there's only 2? So those areas are having issues. We could get into that a little bit more, but maybe it had something to do possibly with the high cost of living in California already, high regulations, the mandates and stuff like that, which were pretty harsh for people. A lot of people that moved here told us that's why they were moving here to Arizona and the Phoenix area. So anecdotally, and when you look at some of the migration going on from certain areas to other areas and what U-Hauls cost, for instance, I was listening to a stat the other day. It was $2,400 to take a U-Haul from Illinois, central Illinois, from Chicago to Florida or central Orlando, $2,400 versus going from Orlando to Chicago was $700. Okay, so big difference in pricing there. It's just one of many indicators we could talk about. But so the median, if we read along here, the median price of newly listed homes increased 12% year over year. Okay, so they're increasing. Ask price are down. Asking price, not sales price, asking price. Because remember, people got drunk off. I said this in my last video on kind of the overall idea of, are we in a housing crash? People got drunk on the lottery idea of, we're always going to have this crazy market, which obviously isn't going to happen all the time forever and ever. So the asking prices are down. Okay, we're still trying to get those super high prices. They were going with the high end of the comps and maybe even adding more onto that, which isn't a normal market. Usually you take the average appraised value and go with that as far as your comp prices go. From all-time high set during 4-week period ending May 22nd of last year, during the same period, we're down just 0.3%. Okay, doesn't sound like a crash there. Monthly mortgage payment on a median ask fit to 2290 at the current 5.2% mortgage rate, up 37% from 1668 a year ago. Okay, like for every percentage point, you're going to go up. On a mortgage, you're going to go up right around 10%. We went from about 3 to just over 5, and housing prices obviously were going up in almost every metropolitan area across the country. And keep in mind, real estate is very seasonal, so there's going to be different equity gains in different areas, and some, as we noted earlier, a couple of them had losses in major metropolitan areas even. So that when the mortgage rates were, it says here 2.8%, yeah, that's down slightly from the peak 2464 reached during the 4 weeks ending in July 12th. Pending home sales were down 16% year over year, a slightly smaller decline than in recent weeks. Okay, so again, none of this should be a surprise, but look at this. New listings of homes for sales were down 12% from a year earlier, the largest decline since 2020. Oh, so what's going on there? All right, so 38% of homes that went under contract had an accepted offer within the first 2 weeks on the market, down from 45% year earlier. So we're seeing that the contracts went out the first 2 weeks of the market went down a little bit, but that's still not unheard of if you're in a balanced market, right? Still not, in a crazy market, but in a balanced market. So 26, it also says 26% of the homes that went under contract had an accepted offer within 1 week of hitting the market. So that means one out of every four homes actually went under contract in the first week. So a lot of this says we're really not looking, a lot of people aren't looking into the numbers and the data. They're just kind of going with the clickbait out there. And maybe, real estate isn't for everybody, because some people are wanting the super fast, high, crazy sales, but they're just not getting it now. So none of this would be happening. Even these stats, would be happening in a crashing market. So people are panicked with, due to the clickbait craze out there, and that's how they make their money. We're not in a crashing market according to these numbers, just a more normal, balanced market, a neutral market. Yes, sellers are a little bit panicked trying to sell too high, super fast, being impatient. But the as far as the sales go, the number of sales and the time on market and the supply and everything, it's really not out of line. Okay, homes that were sold were on the market for a median of 22 days. Okay, seems reasonable, up from 20 days a year earlier, and a record low of 16 days set in May and early June. 43% of homes sold above list price. Okay, 43% of homes sold above list price, down from 52% a year ago, but 43% still isn't sounding like a crashing market. It just doesn't. Okay, for all the people out there that bought into the craze, of what's out there in the clickbait, or that didn't understand that, hopefully this is a little bit of an awakening for those who are trying to make money off the clickbait. Sorry to burst that bubble, but you're kind of misleading people there on that data. If we look ahead here, on average, on average, 7.8% of homes for sale each week had a price drop, a record high. But remember, we just came from the crazy insanity of never happened before lottery money housing market. Okay, and that data, I kind of showed some of that last week, and what the media was saying the past 7 years even the past couple of years and what that really looked like in numbers. And you really would have missed out if you hadn't bought since the last crash, waiting for the next crash. Okay. And that's what a lot of people were doing out there. And we hear that all the time. And over time, real estate always goes up. So it again, it's not crazy that, hey, yeah, it just dropped a little bit because we weren't in the crazy super nutty market that we were in. So for that to drop a little bit, again, not crazy, because we were in a record market. We have a record drop as far as average homes for sale each week. Okay. So the average sale to list price ratio, which measures how close homes are selling to their asking price, declined to 100. Now, note, they declined to 100.6 from 101.7 a year earlier. Okay. Now, normally, kind of a healthy market here in the Phoenix area, and I would say in general, is about 98 or just a little bit above 98% of list to sales price or asking price to sales price. So again, I'm not surprised that it was over 100 last year, and we're at about 100 right now. That's still, we're just a hair over 100. That's still amazing, guys. That's amazing. Okay. That puts us in, kind of more in a balanced market territory, but still a little bit above. And again, that's nationally. This is nationally. In other words, the average home sold for 0.6% above its asking price. That's not a crash, guys. That's not a crash. So whoever keeps saying we're in a crash, you've got to kind of question where they're coming from at this point. So now let's get something else in here. Hopefully you can see this. I'm bringing this in. This is an article from Fortune. Home prices are falling as home builders get put on their butts or arses. It goes into saying, and again, when they're saying prices, they're meaning new home builder prices. Okay. Of course, they're going to come down if we're in more of a balanced market. Maybe in some areas, we're even in a balanced market. What's happening in our area is a lot of our luxury market areas like Scottsdale, Paradise Valley, Carefree, those areas are actually still in a seller's market, technically, according to Cromford report. So on the Cromford Market Index. So a lot of this, as far as pricing is concerned, is a surge in supply that we got from new home builders along with resale homes that came on the market. Now, some of those resale homes are people who are also going to buy, though. Keep in mind. So new inventory is really, in reality, usually going to be, unless it's somebody that's an investor or second home seller selling a property who's maybe got a vacation home, usually going to be technically more in the realm of what are the new homes. And also keep in mind, a lot of the surge in supply is because builders are putting their home on the MLS, whereas before they really didn't have to during the last year and a half, because homes were selling so fast with such huge demand in a lot of places that they didn't even need to put it on the MLS. So that kind of skewed the numbers and changing the numbers a little bit on the MLS itself in a lot of metropolitan areas. So keep that in mind too. But this next section that I want to show you is, it goes on to say housing boom saw builders get a little greedy, eager to turn a profit, ramped up production of unsold homes. They're thinking builders could easily find homes, for buyers. And so they started building what are called spec homes. In other words, you don't go in and pick all the stuff out. They pick everything out and build it brand new and fresh of what's kind of trendy at the time. And now builders are fearing, what may be ahead in the next 6 months. Now, keep in mind, even with that, I went into this in my video from last week. During the crash, there were over 3 million homes available, right? That's across the country. And we saw in that video where there was just over 1 million homes for sale right now or at any given time, for the year. So all that has to be put in perspective when we're talking about new home builds, okay, and what that really looks like as far as new supply is concerned. New builds, well, from 3 million, 1 million, and really, usually builders have to, build ahead to try and keep up. Well, that kind of went away during the last crash a little bit, where they kind of were a little bit less apt to do that, and also with what was happening with the lockdowns and supply chain issues with new homes. So that's kind of what we're looking at right now, and trying to play. They were trying to play catch up, and now they're fearing what may be coming up. But housing is believed to be structurally undersupplied. But they're saying they run the risk of finding more homes on the market than buyers in the near term, due to cyclical factors, according to this Ali Wolf, chief economist at Zonda Fortune. Okay, I think there's a full awareness that in some markets, an increase in inventory may hit at a bad time, a time where demand has notably pulled back. So in other words, they were starting to catch up because they were just doing the spec build thing, and they were starting to get, some supplies in, and some, some more help in, their labor. But that is still, again, lower than where we were during the last crash. I mean, we had 53 in the Phoenix area. We had 57,000 homes for sale. 57,000 when the last crash hit. Okay, when that housing market crash hit at 2007. So, and that recession was caused by the housing market. This one is not. So keep that in mind too. Right now, at any given time, we've got about 18 and 19,000 homes for sale on the MLS as of today or this week. So, and a lot of that is new builds, because now the builders are seeing this slowdown in demand with interest rates and the higher costs and everything, and a little bit less migration happening. So, and with them catching up, the time of year, the seasonal time of year, for us here. So for the Phoenix metropolitan area and across the country, a lot of people are just it's kind of a perfect storm. Right after Labor Day, we should see things, kind of ramp up a little bit. And then after the holidays, again, kind of back into tax season, school, and more stuff getting eaten up faster. So, but he says, I think there's a full awareness that in some markets, an increase in inventory may hit at a bad time, a time where demand is notably pulled back. Okay, a lot of that has to do with the clickbait and the craze out there too, besides the interest rates and everything. Just remember, if people are going to buy a house, they're going to buy a house. Okay, it doesn't matter what, they got to pay rent or they got to pay a mortgage, unless they're living in mom's basement. So it's a matter of what are they going to put the money into, where they're renting and throw money out the window, or they set their rent payment for the month by buying, gain equity, and which we're still seeing equity gains, and getting the tax benefits and everything, and having the freedom to do what they want with their home. There's not only a record, it says here, there's not only a record number of unsold homes under construction, there's also a record number of total homes under construction. Even sold homes are liability for builders. Spiking mortgage rates are translating into spike in builder pulling out of their contracts. Look no further than, D.R. Horton, and cancellations jumped 24%. And a lot of that, is not just due to the fact that people didn't buy a house. They just saw that, oh, now that there's a lot more inventory out there, maybe I can pay $50,000 to $100,000 less for a house and get what I want, even though it's a resale. I'm not having to pay full price for a home. So now builders are lowering their prices a bit. They're also offering more incentives for closing costs and to buy down your rate. But still, people are finding that maybe a resale is better fit for them, because it may have everything they need at a lower cost. It may even have a pool. It may have a landscaped backyard, all these sorts of things that maybe even with a new home, you're not getting, and you're able to save that money. The article goes on to say, but don't pencil in a 2008 style crash. And by the way, earlier in the article, it does say, for some reason, it's not pulling up. It's like the screen froze up on me, so sorry about this. I'll just read it to you. Um, you know, earlier on in the article, Powell says then pivoted and said, whereas the supply of finished homes, inventory of finished homes for sale is incredibly low, historically low, it's still a very tight market and prices might keep going up for a while, even in a world where rates are up. So it's a complicated situation. Okay, this is Jerome Powell, and we watch it very carefully. But don't pencil in a 2008 style housing crash this time around. Homeowners are less debt burdened, and subprime rates or mortgage rates are less of an issue. That said, had supply chain constraints not held back by builders, it might, or for builders, it might have been a different situation. In other words, if they had overbuilt again like they did in 2008, which they couldn't do because of supply chain issues and all that, and because they were behind the eight ball to begin with because of the last crash, then situation could have been different, but it's not. So it's just a matter of a kind of a perfect storm for these couple of months that we're in right now, I think. And we're going to see that all level out. Also, remember that when we say that the rates are going up, it's not directly for mortgage rates. You know, when they talk about raising rates, that's basically, you know, to borrow lines of credit, credit cards, all these different things. To borrow money in general may cost more across the board, but it doesn't always directly translate into higher mortgage price. Matter of fact, in some weeks lately, we've seen where mortgage prices have stabilized. They kind of have already built into what they feel the need is for mortgage rate hikes or stability, and even seen in some cases where mortgage rates have dropped a little bit. So Bill, it goes on to say builders lucked out in that they couldn't add as much supply as they wanted to in real time, because if they had done that, we would have oversupplied the heck. It says the hell out of the market. We would be in much different backdrop right now. So anyway, that's from the Fortune article, and that's it on this part right now. What I want to kind of leave you with, I think, is the fact that, you know, we are really, especially in the Phoenix area, again, it's seasonal, it's regional, as far as real estate is concerned. But I think right now the thing to keep in mind is there's clickbait out there. That's how they make their money. If they said we're in a balanced market, don't worry about things, nobody's going to click on that. Nobody cares about that. But if they housing crash, they click on it, and that's how they make their money. But when you dig into the data and you really look at how wrong the media has been over the years, it's important to kind of, you know, point out all the details and all these things so that we understand that, you know, it's not Chicken Little skies falling. We're not in another housing crash right now, as far as what we can see, with all these things, you know, short, you know, any short sales in the pipeline or pre-foreclosures or anything like that. We're just not seeing it. So guys, I hope that helps us. Kind of my in-depth is the housing market going to crash part 2, and we'll do some more of these, I'm sure, as we go along, and then I'll be getting out our weekly housing market update, as I always do, from our friends with the Crawford Report and our local information for the Phoenix metropolitan area. Guys, if you have any questions at all, make sure you reach out to us at 480-788-8569. Call or text Cynthia and I there, or at the Mincola Group, or you can always email us at home@mincolagroup.com. Check us out at mincolahomes.com, mincolagroup.com. Make sure you like, share, subscribe on YouTube, Facebook, and Instagram, and Rumble. And guys, we will see you next time. Thank you so much. Bye-bye.